Hey guys, welcome back to another video. Today we're going to talk about how you can go from a consistently profitable trader to really taking things to the next level. And I'm going to explain some of the changes that I made in my personal career to really exploit my edge to its full capacity. Now, if you guys are brand new, I should probably give you a little bit of an introduction. My name is Akil Stokes. I'm a former struggling trader turned consistently profitable trader turned money manager turned trading educator. I am one of the co-founders of tier1trading.com. I am the host of the Trading Coach podcast, and this is a weekly video on YouTube that I provide for you guys. Now, on a weekly basis, I provide normal trading edge videos. If you guys are tier 1 members on the platform, you get that each and every week. That's where we're looking at the charts. I'm showing you some of the best ideas that are on my radar for the week ahead to kind of give you a heads up and edge of what to pay attention to. Here on YouTube, I like to really bounce back and forth between technical videos, right? Last week was about 30 minutes of technical analysis, and videos that will provide good lessons, since I know I don't have the opportunity to work with all of you guys on a daily basis. So if you're someone that came here just for the technicals, I apologize, but don't worry. Remember, starting on Monday, we kick off our 4-day trading workshop. So it's going to be about 3 hours a day, so 12 to 15 hours of training during the week. And I can guarantee you're going to get all of the technical analysis that you can handle. So make sure you're registered if you're not already. Also, again, this is a workshop that is for you, by you, meaning that you guys are going to be writing the workshop agenda. So if you do have something you want to learn about or an obstacle that you're facing in your trading career currently, and you're not really sure how to get past it, write it down in the comment section below. We're going to be acquiring all of the questions and comments and kind of feedback this week, and we're going to start putting together our training schedule for the week ahead. That way we can answer all of the questions that you guys specifically asked. All right, let's hop into today's video. It is some footage from one of our live trading room sessions, and I hope you guys enjoy. And that would be the first question that you would have to ask. Because here's the thing with trailing stops, right? It's active trade management is key. I think trailing stops is a great practice. I think once you find yourself as a trader, and what I mean by find yourself is you kind of, you know your strategy, you know your style, you kind of are what you are. It's better reward and nothing to lose. We'll see that's not necessarily true, and I'll give you an example of that real quick. We have to know when to trail stops. Trail stops can be the biggest difference maker in kind of increasing your profitability once you have a strategy that works, because once you have something, your win percentage isn't necessarily going to increase that much, right? If Eric is trading something and historically it's been like a 60% strategy, he's not all of a sudden going to get it to 80%, right? It's going to be somewhere around 60. So the difference maker with that is, right, you got to be comfortable with that 60% strategy. The difference between that is, or the difference maker is, okay, well, how can I maximize my profits? How can I minimize my loss, right? Does that make sense first and foremost? Your win percentage isn't going to change that often, right? Think about it. If you've back tested something over thousands of trades, right? You've done 10 years of back testing and it's shown your percentage to be 60% over that long historical period. Do you think all of a sudden, now that you start trading it live, it's going to be 70%? No. What is it probably going to be? It's probably going to be 50% or 60%, and maybe a little bit lower due to human error, of course, right? Human error, missed opportunities, all that fun stuff, right? So that, even if you get better, right, it's going to be very hard to boost your win percentage by 10%. So I think too many traders worry about that. I got to get better win percentage. No, right? There's more important things, right? If you have something that's 60%, and you average a 1-to-1 risk reward, right, you're going to be profitable, correct? So if you have something that's 60% correct and you have a 1-to-1 risk reward, right? Something that looks like this on average, you're going to be profitable, right? Because you're going to have 6 wins, 4 losses for every 10 trades. So how do you become more profitable? If your win percentage isn't going to change that much, what can you increase / decrease? That's going to be your risk profile, right? If you can, and let's do this, right? Let's take, I love doing the visual stuff, right? We're going to take this, we're going to take our 6 wins, we're going to copy and paste this 6 times, right? 1, 2, 3, 4, 5, right? Right? And obviously, if we have 4 losses, so 6 wins, 4 losses, and again, these are just random risk rewards and random profit levels, right? It looks like this, right? Whatever's left at the bottom is your profit, right? So this is your profit at the bottom. Does that make sense, guys? Now let's take this same practice, right? Let's keep your win percentage the same, but let's take these wins and let's increase them by a little bit. Whoop. Let's take this loss and let's decrease it by a little bit. Whoop. Right? And you can see just slight little adjustments there. And then let's see what the difference is. Boom, 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 boom. Bang. Come on now. Too much yellow. Bang. Bang. One more. 2 more. 1, 2, 3, 4, 5. Need one more. Let's put it up here. 6. Still got 4 losses. Let's put it up here. 1. 2. 3. 4. What a difference. You've just earned yourself an extra square. Basically a full extra win, right? And it's a minimal adjustment, right? It's a very minimal adjustment, right? Obviously we didn't do you can, if you want to be nerdy, you can actually do the math and do the numbers, right? But that's a very minimal adjustment of increasing your win a little bit, decreasing your loss a little bit without changing your win percentage, and you've essentially earned an extra win. This is over a 10 trade sample size. Imagine this over a much bigger sample size, a 50 trade sample size, a 100 trade sample size, right? What's going to happen? That profit area is just going to get bigger and bigger and bigger, right? Small adjustments, right? Small, consistent adjustments over time equal big, massive changes. Does that make sense? That's the power of a small adjustment. And for people that are caught up on this get rich quick stuff with trading, right? Compounding is the same way. A lot of people get upset where it's like, I had another guy the other day, hey, Keel, got $50 in my account and I can't make a lot of money. Duh, of course you can't. Don't worry about the money. Worry about your percentage, right? If you got a $100 account, right, and you can make 2% a month, right? What's your dollar figure? Let's just say 5% a month. You're a, in my opinion, a great trader if you make 5% a month on average. You got $100, you make 5% a month, you made $5, right? Who's excited over $5? Woohoo! Doesn't seem like much, right? So people get upset and they're all angry. Oh, you made $5. No, you made 5%. Let's fast forward into the future where you have a $100,000 account and you're still making that same 5% a month. Now all of a sudden you're excited. Now all of a sudden you label yourself as a good trader. But what changed? Did your trading actually change? You were making 5% before, you're making 5% now. You're doing the same thing. The monetary figure changed. Why? Because you simply have more money to play with. But the actions are the same. The actions are the same. So if you can make 5% a month on a small account, ideally, and obviously money has a different psychological pull. The more money you have in your account, I think the harder it gets. But ideally, you can make 5% a month with a much bigger account. But you got to think big picture. Then the question is this. And this, I think this is the easy question in my opinion. So the question is, if you got $100 account, and we're just using this example because that's what the guy emailed me. You got $100 account and you're making 5% a month. You're doing that consistently. You're a good trader. You're not really making any life-changing money or day-changing money off of it. Now the question is, okay, well, how can I put as much money into the account as possible? And I think that's the easy part, right? Well, maybe it's the easy solution. Maybe it's not easy because I think people are not financially responsible. But if you become financially responsible, then it's the easy part, right? You start looking at your personal budget and you're like, okay, how can I save money? All right, let's stop eating out every day. Let's stop, let's ditch some of these streaming services, right? Boom, I just ditched Netflix. I just saved myself $20 a month. Boom, put that into my trading account. Can I pick up extra hours, right? Let's be a DoorDash driver or Uber driver. Let's pick up extra hours on the weekend, make some cash, put it into the account. Boom. Hey, I'm good at trading. Let's start a signal service. Let's get people on a $20 a month subscription service. Boom, capital in my account. Hey, let's start a YouTube channel. Let's throw some ads on it. Maybe I become super popular for something and I start getting some ad money. Boom, right? I don't think making money is the hard part. Trading is the harder part. Being consistently profitable is the hard part. If you put me in a position where the only question is how can I can do this consistently, how can I make more money so that I can fund my account so I can turn my $5 to $50 to $500 to $5,000 a month? Shoot, I'm out there working overnight every single day. Because I know that it may take a year of hard labor and investment. But after that year, if I can make an extra $20,000 a year and throw that into my account, shoot. But people don't think that way. People don't think that big. They want the easy way out, or let's just increase my win percentage. Or I'll just trade a bigger position size because I'm making 5% a month, but it's only $5. So if I just max out my leverage, I can make $100 a day off my $100 account. Oh no, I went broke. Like, think realistically. I had a great podcast the other day. I don't know if you guys saw it with the guys. Are you guys familiar with the guys at Trade Society? Great interview with them yesterday. Great interview. We talked a lot about struggle and failure and adjustments and just the right mindset. I put on a chat this morning. The German guys, yeah. I was their first podcast interview, which was good because I had zero expectations. I'm like, I'm going to be the best. I'm going to be your best episode because there's no one else but me. But man, this stuff is powerful. I hope you guys get it. Like, this stuff is powerful because it's, and I didn't realize it until I gave up on trying to make my win percentage better. I was so caught up on that, like, okay, I got to win more to get more. Got to win more to get more. And when I started focusing on the small stuff, okay, if I could just manage my risk, if I can get a little bit better at target taking, if I can get a little bit better at maximum adverse excursion and tighten that stop up a little bit, where I know I'm wrong as soon as I'm wrong, and I don't have to kind of lose money finding out that I'm wrong. I've been the same trader, guys. I've been the same 45 to 55% trader for years. And I'm actually more profitable than I was when I was a 70% trader. And that's because I was making a lot of mistakes. But tightening up this stuff is the most powerful stuff. And it's cool when you don't worry about your risk, or you don't worry about your win percentage, when you're no longer I used to be shamed for telling people I was 50% trader. I used to be embarrassed, where it's like, hey, what's your win percentage, Shaquille? I'm like, 50%. Oh, really? And then I started hanging around actual traders, and they were telling me, hey, well, yeah, I'm like 35% historically, Akil. And I'm like, what? I mean, you're one of the best traders. Yeah, my risk reward is really good, right? You guys have seen the graphic, right? I'll bring it up real quick, and then we'll continue this subject on trailing stops, because I'll tell you how it's not always a positive. But let me bring this up real quick if my thing doesn't freeze on me. I think most of you guys have seen. Has anyone not seen the risk reward graphic we've done? This is one of the best graphics that if I can't find infographics that Jason Greystone created, right? This is what you have to realize. You can be a 5% trader and still be profitable. You just have to have an extremely good risk reward, right? Work up this level, right? 33%, right? If you got a 2-to-1 risk reward, 33%. It's not just this. It's not just what's happening in this right column, right? It's these on the left. It's a comparison between the two. They all work together, right? They all work together. They all work together. So you got to find that mesh point. Find that mesh point. But is there any difference for trailing stops and great risk reward? Trailing stops is that. I mean, that's part of your risk reward. Trailing stops. That's risk management. So let's go back to the trailing stop topic. And here's why it may not be a good idea to trail stops. So first of all, right, we want to understand the situation that we're in. For this trade right here, would you guys consider this a trend continuation or a counter trend trade? Well, you can't really explain it. I mean, when you trail your stops, you're reducing your risk as price is moving. So the math is going to be dependent on the actual trade scenario. So there's no set math term for trailing stops. It's just you're reducing your risk as price goes in your direction. So it's going to depend on the actual trade setup. But this is not a trend continuation. This is a counter trend setup, guys. Euro yen, right? We're running into previous structure. This is a counter trend trade. This is a structured trade, right? Counter trend, counter trend, counter trend, right? So in general, with counter trend trades, are we looking for big, long-lasting moves or short-term periods of relief? We're looking for short-term periods of relief, right? So if we're making our prediction, or in general, when we make our predictions, we want to predict where do we think the market's likely to go, right? And again, my prediction was this, and everyone's prediction is going to be different. My prediction was that price is likely to go down to this level. I don't see any reason that price would go further than that level. So if I decide that I'm not going to take my position off here, and maybe I'm going to trail, right? And everyone trails a little differently. Let's pretend we're trailing at structure, right? If we do something like this, right? We're trailing behind structure, right? And I'm shooting for a move. I'm just trailing stops, right? In order to get stopped out, price needs to violate that previous level of structure that I'm trailing, correct? So if this is my stop loss and I'm trailing at structure, I move it down with the ebbs and flows, right? Would you guys agree? Yep. When I get stopped out, I just got stopped out for less than what I would have made if I would have just taken everything off at that single position. So do you see how it's not always a positive? And we talk about in the course, again, there's pros and cons of trailing. So, you know, there's millions of scenarios where you can trail super tight and catch the move lower. You trail super tight, you also could be stopped out earlier before the market ever goes there. So there's always a pro and a con to it. But if you're trailing at structure, right, you're going to be stopped out after price violates your trend, right? Because you're trailing with the trend. And in order for you to be stopped out, you want to see that trend violated. So you're actually you can lose more money than what you would have done if you have a set target position. And that's very important to know on a counter trend trade, because on a counter trend trade, you're not looking for a follow through, right? You're not looking for a long directional move. Now, a trend continuation situation is going to be a little bit different. So why do you think a trend continuation scenario would be different? a trend continuation would be different because you're expecting a big move, right? If we're looking at gold or we're looking at the NAS 100, something like that, right? We are involving ourselves with the trend, right? We are bullish on those two pairs or on that index, right? We're bullish, we're bullish, we're bullish. We're looking for a bullish move. We are with the trend. Our expectation is that we're going to see a bigger long-term lasting move instead of a short area of relief. So now, because we're looking for a bigger long-term lasting move, there's a higher expectation that price is likely to continue in that direction versus a situation like this where we honestly don't even think that price is going to continue lower. So in a situation like this, for my opinion, again, it depends on where you're looking at for targets, it would be a complete waste to trail. Because why am I trailing? What am I trailing for? I'm trailing past a level that I think price will go to for a hope that we may break lower and have a complete reversal. And that hope may happen every once in a while. But the majority of the time, do you think that you're going to get that complete reversal or you're going to get that short little area of relief? Majority of the time, you're going to get that short little area of relief on these counter trend moves. And if you do any back testing, right? If you've done back testing on trailing stops, you'll see something pretty cool where it looks awesome because you catch the bigger move until you start doing all the math and you start seeing all the times when it actually, you would have made more profit if you had a set location for your stop loss or for your target. Right, so everyone looks at kind of like these moves where it's like, oh man, I'm chilling with parabolic SAR. I would have caught all this up here. Well, here's an example. Look, where do you get stopped out on this trade? Right here. Where's the extreme that price went? Up here. And again, you're not catching the extreme, obviously, but the point is, right, when you're trailing, price is going to pull back, right? You're not going to get trailed out until it pulls back. And most of the time when it pulls back, there's going to be a lot of profit lost on the table. So you've got to think about when is a good time to shoot for that bigger move and trail and give the market room to breathe and get that big move. When is the time to kind of just have a set target location and say, hey, this is where I think price is going. This is where I want to be out. If it continues, good for you. I got what I wanted out of the market and I'm out. Because you could put yourself in a situation where you're actually blowing profit shooting for that big move. So I think there's a time and a place for it. There's a time and a place for it. As far as trailing without having a set target. Now you can trail and have your set target. You can combine the two. So you can have your set target down here and say, hey, I'm going to trail on the backside and if we don't get down there, then at least I get stopped out for a little bit right here. But if we do, then, I don't want to be greedy past this point. So you can certainly combine the two. What I'm referring to is using trailing stops as your exit, meaning there's no set destination. You're just saying, hey, I'm going to exit whenever I'm stopped out when the trend's violated. So hopefully that gives some insight into the pros and cons of trailing. And of course, if you want more, you can go to the training course section that we did on there. It kind of talks about the good and the bad of kind of both reasons, using a mechanical way of trailing and using kind of a structured way of trailing. There's no right answer. It's all give and take, like trading, man. You gotta sacrifice one thing to get something else, and you gotta find within yourself, what type of balance am I okay with. David says that's what I found. If you have a tight trailing stop, you will get stopped out, and if too far, you will miss out on pips you wanted. Right? Yeah. And it sucks every time, right? Because you'll have moves where you're like, man, if I was trailing looser, that would have been a 1,000 pip move, right? There's no perfect way to do it. If there was, I would be doing it. It's all a give and a take. You gotta be okay with that. Gotta be okay with that. And Chris L says Aussie dollar is a good example. Yes, even if you're trailing half your position, it's still the same thing. You're still in a position where you could be wasting profit. I think at the end of the day, here's what you got to understand, right? So let's say you're trailing half a position. Why do we ever want to trail, or why would we ever want to trail or place targets at a location in which we don't think price is likely to go. Like, do we think price is going to go down forever on this opportunity, guys? Right? So why would we trail as our way of taking profit instead of having a set profit mark? Why would we trail if we don't think price is actually going to do it? It's the same thing with, I tell you, a lot of traders, the issue that I see with them is that they're horrible at placing targets, right? Because they place targets and I'll be like, well, do you think price is going to go there? Well, no, Akil. Then why'd you place targets there? So it all comes down to that. If you believe that price is likely to go lower or continue to that level, then trail. If you believe that price is in an uptrend and there's no ceiling and you just want to catch as much as the move you can, then trail. But if you don't think price is likely to go past this level, then I think it's stupid to not take your money off at that level. Like, why would you shoot for this level if you don't think price is going to go there? Who can answer that question for me? That's the question that we need to ask ourselves, right? Why am I taking profit at this level? Why am I shooting for a level that I don't think price is going to go to, right? That's like betting on a team that you don't think is going to win. Would you do that? So before you leave, just one last reminder, our 4-day workshop starts on Monday, August 17th. Make sure you register. Even if you can't be there live, we're going to be recording all the sessions. We're going to mail them out at the end of each day. So if you're not registered, you're not on that mailing list. If you're not on that mailing list, you're not going to get the recording sent to you. Then I'm going to get an email that says, hey, Akil, I haven't seen the workshop, blah, 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 blah. So save us all the trouble. Register. All it's going to cost you is your email. I hope to see you there live. And if not, I hope you guys enjoy the recordings. So remember to write your topics or your questions below. We're going to look through them this weekend. And I can't wait to kick things off on Monday. All right, take care.